Absa Bank has recorded 20.9 billion, that is 28% profit after tax. Well done to them, and I'm going to have a conversation with the CEO, Abdi Mohamed, to unpack the numbers. Let's get straight to the conversation. Abdi, it's good to see you and welcome to the show.
It's good to see you. It's that time when we meet and have this conversation.
Absolutely.
It's good to see you too.
Absolutely. Very well, commendable numbers when I look at how you have really gone through from 2021 all the way, steady double-digit growth, and now you have hit the numbers of 20.9 billion. I just wanted to ask you, what would you say were the key drivers to this? And in general, what is your feeling about the numbers?
Well, I think a key word for us is consistency and ensuring that our growth is sustainable and it's consistent over time. In terms of the key drivers, we, as you may know, are executing a 5-year strategy horizon. We are somewhere in the midpoint. We started in 2023 and it runs all the way through 27. And we continue to remain focused on the key pillars of that strategy, which is looking at the consumer banking side, where we've been a market leader for many years, driving the business banking organization, the area that serves the SME segment, and of course, corporate and investment banking, which has traditionally been a very, very strong area for Absa. And to drive that, to drive those three businesses, we have three enablers. We focus on digitization, ensuring that we continue to digitize and make the business more efficient, more customer friendly. We focus on talent, both attracting and retaining the best professionals in the industry. And that's an area we've done quite well. And today in the results, I showed some of the metrics around diversity, some of the metrics around our ability to retain, the surveys that we do internally with our own staff, and so on. And then lastly, it's the brand. Really, we have a very strong brand in the market. It's an asset for our business, and we've been leveraging the brand to see how we use it to drive our growth. So it's been a consistent journey of execution on the strategy. The environment does change as we move along and has been quite dynamic. We maintain the flexibility to ensure that as the environment changes, we are also adaptable and we are flexible. But the core strategy that we are executing has remained the same, and it has shown some good results.
Excellent. Let me move on first of all to the good news, because a lot of people who watch this conversation as shareholders, and your share price has doubled since as well 2021, and now you're trading at around 18, which is commendable. I want you to say what you attribute this to, and then number two as well, the final dividend. What have you given your shareholders?
So on the shareholder front, and of course this is the one of the most important stakeholders, our strategy is anchored and driven on a multi-stakeholder approach. We are a very customer-centric organization. We drive a strong agenda for the colleagues that we work with in the organization. We drive a strong agenda for the communities in which we do business as part of our sustainability program. But back to your shareholder question, shareholder value in its entirety is a very important part of the journey that we are on. And the point you make around the share price is an important part of that. It clearly shows the market listens to what we are executing, believes in the strategy and the roadmap, as a result of which, as you said, between 2021 and now, it's a 2x kind of growth in the share value. And that's an important component of the shareholder value conversation. But additionally, of course, as you say, is the dividend. We ended up with a 1.75 dividend for full year. It's a 13% growth on prior year. And the growth in our dividend number continues to be consistent. And we continue to drive shareholder value. And with dividends, you're always balancing between payout now and return, as well as investing for the future.
Yeah.
And that's always a fine balance.
Absolutely.
But when you look at the share price, it appears that the investor community also believes in the direction of travel that we have taken.
Okay, fair enough on that. Let me talk about your strategy execution and business diversification. And as you've alluded to the fact that you're now midway into your strategy, and which definitely is delivering. I think that's not even a question. But I wanted to highlight what I heard you, Chairman, speak today. I think he mentioned that you're now more focused on capital-light, non-traditional services. I wanted to ask you, how is this playing out, and which areas are you seeing most traction?
Yes, and that's the question of growth.
Yeah.
And returns.
Yes.
And sometimes people present it as either or. We would like to look at it as both.
Yeah.
We want to grow, but we want to grow in a way that improves returns.
Yeah.
And that's the balance that you try to achieve. And this capital light conversation is an important part of that, to try and look at alternative revenue sources, areas where we can look at new opportunities, give innovative solutions to customers.
Yeah.
And the example I was giving when we were up there is the custody business in corporate and investment banking, which is brand new, launched in 2024, winning new mandates in the market. We have a bank assurance business that is now market leading, that has done quite well. And, it continues to present opportunities in that space.
Yeah.
In the, investment business, we have seen an uplift in that as well.
Yeah.
So overall, we're looking at new revenue streams that introduce that capital light opportunity.
Yeah.
Because that then on a net basis has an incremental impact on the overall return to the shareholder.
Excellent. Looking at all the macros that were there, from the interest rates to the geopolitics that you see, what would you say that this one was the one that was keeping us awake and hoping that we will have a good sailing through 2024?
Yeah, look, there are quite a number, and as with all macro and context conversations, it's never about, everything that is wrong or right. It's always a mixed picture.
Yeah.
There were quite a bit of elements within the macroeconomic environment in 2024 that presented opportunities.
Yeah.
When you look at metrics such as inflation, the decisions the MPC took to ensure that we get on top of inflation and we drive the cost of credit down. Some of the decisions that were made in August and then much later in the year 2024 really improved the second half of the year. And you've seen the industry as a whole kind of following and the cost of credit consistently coming down.
Absolutely.
And when I look at the future, given where we are with the rates, I think that there is a real opportunity for better credit utilization, which portends a positive outlook from an economic perspective. So there were some good opportunities, and we've worked very closely with our regulators. We've really appreciated some of the work that has been done, especially by the MPC and the overall management of the monetary policy. To address some of the issues that were there in the first half of the year. At the same time, like every other economy in the region, there have been issues around disposable income. The consumer banking side of the organization faced challenges during the course of the year. And we've seen that now as we come into the new year start to improve. And we continue to watch that. We had a stable FX environment with the shilling dollar being in a range from around February of last year all the way to where we are now, and good dollar liquidity as well. So that presented some opportunities. We've seen some challenges in certain sectors, and manufacturing is a particular one that we've seen that is showing up in our non-performing loans and so on, where we see customers really having dealing with a difficult part of the cycle. And I know that it's something that all stakeholders in the economy are looking at to see how do we improve, because it's such an important sector in the economy.
Absolutely.
But there are other sectors doing well as well. Hospitality, tourism, agriculture, and so on.
Okay.
So it's a balanced and mixed environment that we continue to deal with. Yeah.
All right. So in your response, you've mentioned a few factors that would want us to square in on.
Yeah.
And one of it is on the regulator. I think you've mentioned about what the MPC have been doing, the good work they've been doing on your end. But as an industry, there has been a conversation, and I wanted to ask how, after the introduction of the risk-based pricing, what your observations have been, because I understand also as an industry, you're back on the table again and you're fronting some review in a way.
Yeah.
What are your sentiments as Absa?
Yeah, I think and it's an industry-wide journey that involves the KBA and that involves our regulators as well. The journey we are on, and we've been on for quite a while, is to see how do we get greater transmission from the decisions that the Monetary Policy Committee makes to the end user and people who use our services. How do we ensure that the transmission is good? Secondly, how do we ensure there is transparency in that transmission and that it's visible to customers, to our stakeholders, and it's easy to check? And thirdly, it's about how do we create a more unified, standardized way of approaching it that ensures that customers and clients do not get confused by the different base rates that people are using and so on. So those are the core principles that we are looking at. And the risk-based pricing, for the moment that it was introduced, was appropriate. It did fix some issues that were there in play at that time. But like all models, you keep revisiting it, you keep looking at what can we improve. And what I really like personally is that the approach has been an industry-wide approach. There is a lot of support for it. Generally, the industry is convinced that that is a good direction to go for the sake of our customers, for the sake of the wider economy, and we are getting a lot of support from the regulator as well in that regard. Okay.
I will come in later with the NPLs that you've mentioned, but I wanted first of all to come to your expansion and the strategy behind it. Last year when we spoke, when we were released in the 2023 forecast, you planned to double the agency banking network beyond 1,000 outlets. Those are your words.
Yes.
So I wanted to ask you, did you achieve this, and how has this impacted your customer reach and deposit mobilization?
Yes, we did. Our agency banking network is now around 3,000. So we've pretty much tripled from the last time we spoke. We continue to look at other opportunities, whether that is ourselves rolling out the agency network on our own infrastructure, or partnering, which is another way of doing it, where you partner with people with existing networks. So we are currently at 3,000. It pretty much puts us in every county, every location in our country. It has been a big plus for the SME market, whereas transactions are still very much cash-based. And therefore, how far your bank is from you is a very important part of the equation. And the tagline we use for our agency banking is Tupo Ulipo, which means wherever you are, we are as well.
Excellent.
And it's about being where the customer is.
Wow. Let's talk about your digital expansion as well. I see a rise. There's still an increment. But I wanted to zero in on the Timiza. When I looked at the growth, in my opinion, and in my estimate, and you can correct me if I'm wrong, I thought it could have been a bigger boom, knowing very well that customers are more geared towards easy digital ways of, borrowing and everything else. I don't know. I know, yes, there was a growth. Are you satisfied with that growth, or are we together in this that there could have been bigger?
I think with the digital, the way it works is it's a high churn product.
You're right.
People borrow and repay very quickly. It's typically for small, bits of working capital. For some of the, startup community, small businesses, individuals. And so the growth in the portfolio, which itself is about 21%, can be misleading when you look at it in the context of what is the gross lending that is going through the platform. We are very happy with the platform where it has reached. We're looking at this platform not just as a lending platform, but also potentially a platform where we could put other products and services in the future. The usage amounts is increasing, but of course, as you know, we are a very responsible lender. The algorithm and the way we've set up the data is to ensure that the people we lend to are people who A, require the funds, and B, can use it based on their own history and the data that we have. And so that plays into the growth number that you're talking about as well. We're very keen on quality and very keen on treating customers fairly and making sure that we are not over-lending or over-committing, especially for people with incomes in that level.
I still have another follow-up on that, because I think when you were speaking about those numbers, some time back with your CFO, there was when the new government came in, there was the forgiveness of some of these digital loans. So I thought probably there's been a bit of caution when we are lending through this digital means, so that we don't end up forgiving more. That was just one aspect that I thought about. But looking at it, you're saying the activity is still on, and this is not a caution that you have in itself.
It's still on, and one of the big changes that is happening industry-wide is better use of data and AI to arrive at better decisions, to continuously improve the algorithm and ensure that we are learning. So that as we lend to customers, if your history is positive and your history is good, the algorithm continues to increase what you qualify for. And that's very empowering for customers, because then your behavior and the way you engage with the bank makes it easier for you to grow and get more bandwidth within your working capital. At the same time, if the customer appears distressed or is unable to meet their obligations, then the algorithm and the AI also drives it in the opposite direction to make sure that we are managing the exposure, but we are also helping the customer through that journey as well. So data is a big part of the journey, going forward.
All right. I love that, because now it drives me now to the NPLs. Last year, I was clapping for you. You were on the single digit. Now you seem like you have joined the club of double digits a little. I think you're 12.3%. Listening to you, you weren't worried about it, but I just want to get your sentiments and also highlight what are these segments. I think you mentioned a bit on the manufacturing that were most affected, and what are you doing then to mitigate this further deterioration?
Look, I think at 12%, still something like 400 bips below the average in the industry. We would like to be in the single digit. In terms of the sectors that are driving it, the biggest one is in the manufacturing space. But we also have personal unsecured individual borrowing that has increased the number. We continue to focus on how to improve that from a recoveries perspective, and there is a big effort in that space. We continue to see curing of the portfolio in that regard. But an NPL is also a ratio at the end of the day. And one of the other elements of it is that the asset book itself, the lending book, over the last 12 months, not just in our bank, but industry-wide, has generally been flat. And as that grows and picks up, you will see the NPL ratio continue to improve as well. But for us, in terms of where it is, we know exactly the sectors, the names, there are very few of them, and we know what we are doing to ensure that we address that.
Oh, great. So at least you're having conversations with them, which is good. You're restructuring, because I think last year, when we were talking, you had restructured about 2.1 billion of the loans to support your customers. And you're saying you're on the table with them. So just me pushing you a little bit more and asking, so are you looking at the similar ways of approach, or what's the conversation like?
Well, our first conversation with customers in any distress or default conversation is about how to help them And they are very powerful stories in our history of large organizations, large companies that are today doing very well, that we've managed to help through that process. We have a unit called the Business Support Unit, which is about helping customers through conversations, whether it leads to a restructuring, whether it leads to a rescheduling, and approach it from a solutions perspective. Because every business person wants to succeed.
That's true.
Nobody goes into a business project with the aim of not delivering on their commitments. Many times what happens and the events that happen are cyclical, that impact different sectors at different times. A few years ago, actually, most of the restructuring conversations we had was in the tourism sector. Today, it's almost none in that sector. We are seeing more on the manufacturing side. And for us as an organization that has been around in this country for as long as we have, we've been through many cycles with our customers. And it's about ensuring that we continue to have these conversations and we continue to work with them through the difficult phases.
Lovely. At least customers are not afraid. Absa is still your partner. Let's talk about your efficiency. And I really want to commend how the positive jaws have shown in terms of efficiency. Your cost-to-income ratio has improved 37.7%, reflecting very strong operational efficiency. I wanted to ask, what are you doing?
It's a ratio, and we've done quite a bit of work on the revenue growth side, and part of in fact, our biggest driver of profit over the last few years has been the revenue side of the equation. But as I presented when we were talking earlier, we also have a very strong efficiency roadmap, automating and digitizing our back office. The majority of our back office transactions are now going through straight through processing. There are still areas that are performed manually, and we continue to automate and improve on that journey. Directing customers towards more friendly self-service channels has been another big agenda, and we presented the numbers today in the corporate bank as well as in the consumer bank, showing numbers in the 90s of digitally performed transactions in terms of percentage. Corporate itself at 84% of the customers digitally active. And the more customers self-serve, the more you improve your customer experience, but more importantly, you reduce your cost and become more efficient. So it's a combination of pushing the revenue number, but also doing a lot of work on the cost and efficiency number as well. So it's a mix.
So finally, as we come to a close, I think I am still referring a lot to what we spoke about, because it is more of a meter of checking how we've done so far. 2023, you talked about expanding, and I think you expanded all the way to China, which is great in terms of regional expansion. I wanted to ask, how is it going there? And are there more international expansion strategies?
Thank you. I think, and we shared today also the Absa footprint in general, globally, and China then was in the future. The office is now open. We are well represented there. We've had our colleagues from there visit us, and really we are looking at how we support customers through the Chinese corridor. We have the US office that helps us with that side of the world. I was there actually about a year ago, in visiting colleagues and customers there. We have the European office based in London, covering the UK and continental Europe. And the idea is Absa is a strong Pan-African bank with presence across the continent, but is also globally represented. And in that way we bring some important capabilities for our customers. The journey continues. There could be one or two more that are in the works to ensure that we are more globally represented. But our customers are very, very well covered at present, both in terms of global connectivity, but also there is a lot of intra-Africa trade that happens within the East Africa region. there's a lot of trade between Kenya, Uganda, and Tanzania. We are each other's leading trading partners.
Yeah.
And therefore, the capability we bring into that, being present in those markets, to our corporate customers, to our business banking customers who do business in those markets, those cross-border capabilities are also quite important. So really proud of where we are in terms of the footprint.
I know I said finally, but I have a two-part ended part of the question.
Yeah.
When I look at your net interest incomes and your non-funded incomes, I'm seeing some almost extra emphasis on the non-funded incomes.
Yes.
And it looks like it's the new gold. I don't know. You will tell me that.
Yes.
I don't know what you're betting on in terms of growth and looking through your strategy. That's my part one of the question.
Yeah.
And part two, I saw you tick quite a big chunk of entrepreneurs, business people, I think even to some international trip, just to empower them and all that. I wanted to understand what's the thinking behind it.
Yeah.
And hopefully that'll be the next trip, but go ahead.
You should be. You should be
right?
in the next trip. I think, first of all, in terms of that revenue mix, it's a key strategic priority. We want to make sure that we are well diversified, not just in terms of balance sheet and portfolio mix, but also in terms of where the revenue, comes from. But in a way, it's also just a reflection of the market itself, where our customers are going, where we see the opportunities coming from. There's a lot of digital activity in the region today. There's a lot of fintech and innovation that is going on, and we want to partner in that space. And whenever you are in that space, you're talking mostly NFI type of growth. And so it's a balance. Banks at the end of the day are also mostly into funding, providing working capital, which speaks to balance sheet. And you have to do that as a bank. This is a very core part of the job. But this transactional business has become also a real area of focus for us, and from what I have seen for others as well. With regards to the businesses, the entrepreneurs, new businesses, existing SMEs and business banking customers, we see our role as bigger than, here is some money that I'm lending to you.
Okay.
We see ourselves as a partner. In our purpose statement, we talk of empowering Africa's tomorrow together, one story at a time. And that story is a very important thing for us. When we talk to you, we want to see what's your business, what do you want to do, how do we enable it, and how do we take you forward. And the trips that you see is part of the business club, which is an important initiative that we have, where we provide knowledge empowerment. In addition to the international trips, there is a lot that goes on locally. Our business banking customers attend many events to look at different topics that are of interest to them. And once in a while, we find a trip that is of interest. Recently, there is a group that went to Estonia to a tech conference, and there was a lot of great feedback. There is a group of customers that are in the US as we speak, and looking at specific industries there. So it's our contribution to ensuring that the business banking community in Kenya continues to grow. Many of the large corporates that you see today were SMEs a few years ago. And so it's how do we become part of that growth journey and help them drive their business.
Your story matters.
Absolutely. Every story matters.
Oh yeah, I can't end without asking you your outlook 2025 so far, and what are you looking at?
We, of course, as we said, the rates environment has changed. There is a number of elements that have developed in a positive direction. We foresee a return to private sector credit growth. We had a flat year last year. We foresee opening up of some of the sectors, but we continue to remain cautious in some of the sectors where there have been difficulties and where we continue working with customers to ensure that we are improving. So it's cautious optimism where there are certain opportunities that we are looking at, and there are areas as a bank, and this is what we do, where you need to manage the risk and ensure that you are protecting shareholder capital. So it's that balance.
Well done, Abdi.
Thank you so much. It's good to see you again.
Always a pleasure.
Yeah.
There you have it. Abdi Mohamed, the Chief Executive of Absa Kenya, and very optimistic about 2025. And of course, as they say, your story matters. So keep walking with them. Thank you so much. I leave you now with the market.